Hey guys, welcome back. Today, the complete NVIDIA trading playbook, the chart, the setups that fit it, and the levels that matter right now. Here is the last 4 months of NVIDIA on one chart, and it tells you everything about how this stock behaves. In late February, it loses a sixth of its value in 3 weeks. That slide ends in a panic low. Then in April, the trend flips back up, and the same stock that just crashed runs almost 40% to a new all-time high. Then the air comes out again. This video gives you the full playbook for a beast like this, how to read it, the 3 setups that actually fit it, the 1 trap that empties accounts, and the plan for this exact moment. Because today, price is sitting right on the exact shelf where this rally began. Let's start with the numbers. Before you trade any stock, know the animal. NVIDIA is worth about $5 trillion. No company in history has ever been worth more, and it is still up more than 40% in a year. Now the numbers that actually change how you trade it. This stock moves about 3% in a normal day, roughly triple what the index does. So every position needs to be smaller than you think. Liquidity is never your problem. Over $30 billion of this stock changes hands every single day. But here's the trap most beginners miss: 4 mornings out of 10, NVIDIA opens a full percent or more away from where it closed. It gaps. A stop loss does not protect you from a gap. It just sells you at the open. And earnings hit 4 times a year. That is a scheduled explosion, next one in late August. What actually moves it? Spending on artificial intelligence by the giant cloud companies, earnings nights, and one more thing. This company is so big it drags the whole market with it. Know the animal. Now let's read its chart. Reading any stock starts the same way: zoom all the way out. This is a full year of NVIDIA, 1 candle per week. The story is simple. It builds a base near 140 in the summer, and then it climbs. There was one violent shakeout in March. The floor cracked. Everyone panicked, and the market bought it straight back within 2 weeks, then pushed the stock to a new record in May. And today, after the latest pullback, price still sits far above every floor on this chart. That is the tide, and the tide is up. Which means one thing for everything that follows on this stock: you only hunt long setups. Shorting a weekly uptrend is how tourists donate money. Now zoom into the daily. Now the daily chart, where trading decisions happen. And check the dates along the bottom. We are looking at February through today. Box 1, you already have the weekly tide is up. Box 2, structure, who is in control right now. Watch late February. The slide begins, and every bounce after it tops out lower, a lower high. Every drop breaks the prior floor, a lower low. That staircase down means sellers are in control. Then look at April. Price closes back above the last lower high, and from that one close the dips stop breaking floors. Structure flipped. Box 3, volume, the bars drawing in along the bottom right now. That tall red bar under the February drop was the loudest selling day of the year. 360 million shares changed hands. Heavy volume means the sellers meant it. Now compare the April recovery, steady green, and not one panic bar anywhere. Quiet, persistent buying. And box 4, the white line crossing the chart, is the S&P 500, drawn on the same scale. Through the spring, NVIDIA pulled far ahead of the market, the mark of a leader. Lately, that gap has been closing still ahead, but worth watching. 4 boxes checked, 1 to go, the levels. And that is where this gets practical. Box 5, the levels. You can forget every squiggle on this chart except 3 prices. Check the dates. This is just the last 7 weeks. Price number 1, above everything, the record high, 236.5, set in mid-May, never touched since. Price number 2, the seller band. This red zone, roughly 225 to 232. Twice in early June, the market rallied into that band, and twice the sellers slapped it straight back down. Until that changes, rallies stall there. And price number 3, directly under us, the buyer shelf, roughly 195 to 202. That teal band launched the entire May rally, and the June flush stopped dead on it, almost to the dollar. The record high above, the seller band in the middle, the buyer shelf below. 3 prices, 1 battlefield. And price is parked on the shelf as we speak. Time to meet the 3 traders who run this playbook. 3 traders are going to run this exact stock through the last 6 months, each starting with $10,000. First, this is Mike. He trades only the 3 setups in this playbook, stop and target written down before he clicks buy. Next, this is Jake. He calls bottoms, he chases green candles, he sizes up when he is sure, and he is always sure. And finally, this is Tom. He waits for proof. By the time a move convinces him the discount is gone, same stock, same starting money. Watch what the plan alone does. Setup number 1. The trend flip. This is February through May, the full round trip you saw in the gist, and it is the cleanest money this stock offers. First, the structure. The February top sits up here near 198. From that peak, the slide starts, and the one real bounce in mid-March stalls near 189, a lower high. Below it the drops keep breaking floors. Lower lows. That is a downtrend, and the rule is simple: as long as price lives below that 189 line, sellers are in control and every dip is a trap, and Jake has seen enough. By late March, down 10%, he calls the bottom and goes in heavy, no stop. The market slides another 6%, and he dumps it all at the low, which, in the cruelest twist, was the actual bottom. He was nearly right. Being nearly right with no plan cost him $1,100. Now watch the real signal. In early April the stock gaps up and never looks back, buyers announcing themselves. Then, a few days later, the day that changes everything, price closes far above the line at 196.5. That is a break of structure. The downtrend's last lower high is gone and the trend has flipped. Mike buys that close. Not the bottom, the flip. His stop goes under the gap that started the move, just beneath 180. His target twice his risk, up near 230. The math is written down before the trade like always. From there the new uptrend does the work. By late April the move is so obvious that Tom finally believes, buying 10% above Mike's entry on the biggest green day of the rally. And 3 days later one perfectly normal pullback shakes him straight out for a loss. Same trend, same direction. Entry made all the difference. A month after the flip, NVIDIA sails through the target at the all-time high. $1,000 for Mike on 500 risked. The flip is repeatable too. This stock runs this exact dance, slide, flip, run about twice a year. We broke the full method down in our break of structure video. One setup in and the plan is already visible on the scoreboard. The flip paid Mike a clean $1,000, while the bottom call cost Jake $1,100, same chart, same month, opposite entries. Setup number 2, the institutional zone. December, a quieter stretch of the same chart and a lesson in patience. Watch the sequence. A pullback grinds down into mid-December, prints one last red candle, and then the stock smashes through the prior swing high in a straight line. A move that strong is not retail. Somebody enormous absorbed all that selling and bought the ceiling away. That candle is the zone, the last red candle before the breakout, where the big orders actually sat. Mike marks its range and places a resting buy order at the top of it. Then he does the hardest thing in trading: nothing. A month later the first dip comes, and stops $1 short of the band. Close enough for Jake, who buys that dip with no level and no stop. 2 weeks later the next dip misses the zone by 8 cents. Mike still does not move. Almost touching the zone is not touching the zone. Then in early February, price finally touches the zone, and his order fills at the top of the band. No clicking, no chasing. The stop sits 1% below the zone, and the target is the top of the breakout. And on that exact red day, Jake sells his dip in disgust, handing his shares to the institutions at the very price they were defending. That is the whole difference between a dip and a level. The zone holds. 2 days later a giant green candle convinces Tom, and Tom buys the reclaim at full price. 3 days after the touch, NVIDIA rips through the target. $950 for Mike. Crumbs for the same idea from Tom. One zone, one touch, one decision made in advance. The full method, including how to spot the fake zones, is in our order blocks video. After the zone trade, Mike is up almost $2,000 on 2 trades and 2 clicks. Jake has now sold the low twice in a row, and Tom keeps paying full price for crumbs. Setup number 3. The simplest one, and on this stock the best paid. When NVIDIA trends, it rides its 20-day average like a rail. That gold line on the chart is the actual average, drawn bar by bar. Context first, it is late April. The trend is fresh off the flip, and the first leg tops near 217. Now the stock needs to breathe. The question is never if a dip comes. It is where you are willing to buy it. Jake grabs it on day 1 of the red candles around 199. No level underneath, just the feeling that down means cheap. The dip keeps dipping. 4 days later price kisses the rising average, and that tag is exactly where Jake bails out in a panic. He bought with no level and sold at the level. $400 gone on the right idea. Mike plays the identical idea with one difference: he decided his price in advance. A limit order right at the average, near 199, let the dip come to you. The tag fills it without him touching a button. His stop goes 1% under the dip low. His target is the April high. And a trending stock does the rest. 3 days from fill to target, $1,440 on 500 risked, almost 3 to 1. By then the strength finally convinces Tom, who buys $2 below the target and collects $40 for the ride. The dip was never the edge. The level under the dip was the edge. That is the whole moving averages video in one trade, and it sets up the one thing you must never do on this stock. And after the tag of the average, the gap is brutal. Mike is up nearly 3,400, Jake is down 21.5, and the only difference has been where each of them pressed the button. And now the trap, the single most expensive habit on this stock, chasing the euphoric spike. This is May, and the window runs right up to today. The melt-up starts in early May, and in 7 sessions NVIDIA gains 20%, closing at a new all-time high. The news is perfect, the headlines are everywhere, earnings are days away, and Jake cannot stand it anymore. Watching everyone else get rich, he goes all in at the top, 235.74, with leverage and no stop. It is NVIDIA. What could go wrong? Mike measures it instead. Price is 13% above the 20-day average. His rule says above 10% is stretched, no entry, and earnings land in 5 days, a coin flip, not a setup. 2 reasons to do nothing. Even Tom stays out. He wanted to buy, but he hesitated as usual. The next morning brings the first crack, a gap down. Then earnings arrive, and pay attention here, because this is the lesson. It was a record quarter. Revenue up 85%. One of the best reports in corporate history, and the stock sold off anyway. At 13% stretched, perfection was already in the price. When record numbers cannot lift a stock, only sellers are left. From there it grinds lower for 3 weeks. No crash, no scandal, just air leaking out. Jake rides every single day of it, and in early June, down 15%, he waves the white flag and dumps everything into the flush. $2,400, his worst loss of the year, on the best company news of the year. And look where his panic ends. The breakdown lands on the shelf. The same band that launched the rally, the same band price is testing right now. For Mike, skipping it cost him nothing. For Tom, slowness finally pays. Great company, record quarter, terrible entry. On this stock, the entry has the trade. So here's the payoff, the exact map today. This is the chart as of this morning, nothing hidden. Price is standing on the shelf, the band between roughly 195 and 202 that launched the May rally and just caught the June flush. The flush low held it almost to the dollar. Below us, that is the line in the sand. Above us, 2 ceilings, the record high at 236, and before it the band where the sellers live. The zone that rejected price twice this month, around 225 to 232. Between those, one more price, 211.40, the most recent swing high. That is the trigger, so plan A is the reclaim. NVIDIA prints a daily close above 211.40. The June downswing is broken. Buyers are back. Entry on that close. Stop under 204. First target where the sellers live at 225. That is about 1.6 to 1. A base hit, not a home run, and you take it. Plan B is the exit signal. A daily close lands below 194.74. The shelf is gone and the whole rally's floor went with it. That is not a shorting signal on a weekly uptrend. It is a stand aside and wait signal. No longs until structure flips again, just like April. And right now, neither has happened yet. Price is inside the band, so the playbook says the hardest thing, nothing. These are scenarios, not predictions. We react to closes, we never guess. The market goes first, then we act. One more thing before you go, the 4 rules that make all of this work. Here is the whole 6 months on one screen. Mike finished up 34%. The flip paid him first, the zone paid him next, then the dip to the average paid him best, and the setup, he refused, the chase at the top, is the only one on this screen that lost money. Skipping it cost him nothing. Jake finished down almost half. No disaster, no scandal, just 1 bottom call, 1 random dip, 1 knife catch, and 1 chase at the top, each one oversized, none of them with a stop. The stock went UP over these 6 months and he still lost 45%, and Tom, 6 months of stress, 4 trades, minus $60. He watched every winner leave without him and paid full price for the leftovers. Same stock, same screen. The entry was the edge, where you get in and which setups you refuse. Now let's lock in the routine. Your whole NVIDIA playbook fits on one screen. Rule 1, rid the tide. The weekly chart decides direction, and while the tide is up you hunt long setups only. Rule 2, map your levels, the high overhead, the supply band below it, and the demand shelf underneath. 3 prices are the entire battlefield. Rule 3. Wait for a real setup. Only 3 entries exist on this stock: the close that flips structure, the first return to an institutional zone, and the tag of the rising 20-day average. If it is not one of those 3, it is not a trade. And Rule 4. Never chase the spike. More than 10% above the average or earnings inside a week. You skip it no matter how loud the headlines get. Buy the stock at your levels or let it go without you. That is the complete NVIDIA playbook. How it moves, the 3 setups that fit it, the 1 trap that does not, and the exact map for today. Remember, the levels expire. Earnings in late August redraws everything, so recheck the map before you act. And the obvious part, said plainly, this is education, not financial advice. This stock can gap through any stop, so never risk money you cannot afford to lose. Next week, the Tesla playbook. Subscribe so you don't miss it, and tell me in the comments which stock you want broken down after that. See you in the next one.